Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Well, the big news of the weekend, obviously, is the announcement of the death of the ISIS leader, al-Baghdadi. Hasn't seemed to affect the markets too much, however, as the futures at the time of this recording are only slightly higher. In fact, let's just go ahead and get into the charts. So here you can see a chart of the SPY, and here we're right back up towards those highs that were achieved first back in July and then again in September. So we're here for the third time. One of my mentors when I first got started in the world of options trading had an expression, the third time's the charm. Well, that's a cliche. You've heard that before, but what he meant in the world of trading was when you were going up towards a resistance area, as in this case, or bouncing off a support level, the third try, whatever the outcome was of that third attempt would be the direction that underlying was going to go from that point forward. In other words, if we break above these highs, it's likely to hold and continue higher. If we don't, if we spend a little time here and start to back down, then we're likely not going to make new highs, at least not for a while, and the next move is going to be lower. As you know, nothing's 100%, nothing works every time, but I'm entitling this recording, "Is the third time the charm?" We'll find out. If we look at the moving averages, you can see that we're just a tiny bit overbought here from the 10-day moving average, not much. But if you want the market to go higher, a little consolidation here for a day or two wouldn't be hurtful. Gain a little momentum energy to try to blast through that. We do have this lagging issue here of a gap. It can be a breakaway gap, though. It certainly looks like one at this point in time, and we'd come back and fill it down the road at another time. As you know, gaps get filled. There's just no rhyme or reason as to when. So we'll see how that plays out, but it's going to be pretty interesting over the next couple of trading days. As I mentioned in the intro, the futures are just slightly higher, so we're going to have a flat to slightly higher open on Monday, at least unless something changes before the market opens, and then we'll see how the market takes it from there. I did want to show you a chart of the dollar because in past recordings I'd mentioned that I thought this was helpful in the market moving higher, was this dollar weakening, because as the dollar gained strength, it was starting to get to the point where it was so strong it was hurting international companies through exchange rates, etc., making it difficult. And there was a concern about earnings, but the dollar has weakened quite a bit. Now here we sit down at that 61.8% fib level. Now are we going to move back straight up, back towards that wave 5 high? Well, if we do that, if we do move up towards a wave 5 high, again, it's going to start to put pressure on forward earnings with the strength of the dollar again, and that's going to start to be talked about on the financial networks, and that could be a headwind down the road. So far, about half of the S&P 500 companies have reported their earnings in this earnings season, and we're running at about an 80% beat rate, 65% of beaten on revenues, which is kind of in line. That's about normally where things are, so it's not too much of a tell one way or the other, but I do think that maybe some people thought the economy might be weakening a bit and this earnings season was going to be a little bit more challenging than in what it's turned out to be. It's turned out to be just fine, just like a good normal earnings report. When we look at chart of TVT interest rates, this is helping a bit here as far as showing signs that maybe, again, the economy wasn't weakening as much as originally thought. We have the Fed getting ready to likely cut for the third time, and then most people think they're going to change the language a bit to kind of let the market know, hey, all right, we did the 3 cuts. That's what the market was expecting. Now we're going to pause. And I fully expect that's going to be the commentary. Now, will the market like that or not? Because that third rate cut's already priced in, and I don't think there's any surprises. I don't think it'll be a surprise if they announce that they're going to pause from here. I think the market expects that too. And based on the rates going up, again, giving a little bit of an idea that perhaps the economy isn't quite as bad as once feared. Now, we don't want rates, we've talked about this before, we don't want rates going up too far too fast. That could be hurt earnings moving forward, and also could be sending signs of inflation may be brewing or whatever. Just a nice little drift back to the upside, just a steady little drift, move up and make a wave 4 somewhere up in the 38.2 to 50, even 61.8% fib retracement level would be just fine for the market. In fact, that would be helpful, and we'll see if we are going to head back down. There's a lot of people thinking that inverted yield curve was a one-off, and it's, this is the one-off, meaning that this is going to be one of the times that it doesn't forecast a coming recession. But I just, anytime people say it's different this time, it usually just doesn't work out that way. But at least for now, the economy does appear to be just a little bit stronger than what people had thought. And then last but not least, looking at the VIX, this is a little bit troubling here if you want to see the market break to new highs, because we're getting down into this area around 12. It's been support for quite a while, going all the way back to when we were down around 9 at the end of 2017. So after we broke in January of 2018, that big move up in the VIX, 12 has been the support level since then. And so that doesn't leave. We closed at 1265, so that doesn't leave a lot of ammunition for the market to break those highs. So again, a little bit of consolidation, maybe a slight little bounce up here in the VIX, or maybe the VIX is going to break in the 12 level and go back down to 9. It could do that. There's no guarantee that the 12 is going to hold. It's just something to make sure that we watch, because it's been here and held for over a year. So that wraps things up for this week. We'll see. When the time we get to the next recording, we'll probably know if we've broken to new all-time highs. Take care, everybody. If you like these recordings and the information that we're providing for you, give us a like. Or better yet, even hit subscribe. Tell a friend. We appreciate it. Thank you.